So what are the real implications of this hotter than expected PPI report? So CPI, it was a bit mixed. Headline was better than expected, but core was a bit hotter. And people said, well, it was just better than feared. This one's a lot worse than feared. Does this take a 25 basis point cut off the table? Does it officially eliminate the idea of a 50 basis point cut, where it was kind of that became kind of a whisper conversation going on as well?
Look, I think a 50 basis point cut was never really that much on the table, and certainly this removes it. I think a 25 basis point cut now is even odds at best. The market is priced in much more than that, but we have a data-dependent Fed, and these numbers do not give comfort that inflation is cooling. If anything, inflation seems stuck and possibly going higher. So I think this reduces the odds of even a 25 basis point cut in September.
So in your view, you see inflation being stuck and maybe moving higher, but we've heard some other Fed officials say they believe it's kind of like a one-time price shock that would then, I guess, normalize. So for a data-dependent Fed, this much higher than expected PPI report, how do they kind of rationalize that going forward?
Well, look, I think there's a major debate at the table, and that's what you're hearing. The other side of this, of course, as Chair Powell laid out, is it's not just inflation. It's also a question of how the labor market is doing. And that looks like it's weakening somewhat, but there's a big debate about that even. Is that a sign of immigration policy cutting back on supply as well as demand? So I think they go into this meeting about as divided as they were going into the last one, with valid arguments on both sides. I think this Fed, however, if they're wise, would not just risk on the notion that this might be a one-time pop. I think they are, as President Bostic said, they have the luxury of waiting to see. And so I think there'll be some strong arguments on let's stand pat. There'll be some strong arguments on let's move. And frankly, there's even more data to come. And so I think all of us are in the same wait and see mode. As you heard from the president from St. Louis, you know, some people update their outlook even in the morning of the meeting. And so all of us, I think, need to be in a cautious posture here. Penciling in too much at this stage would be, I think, not wise.
Yeah, I think we kind of have a cycle of that where beginning of the year, there's all these cuts expected, and as the year goes on, the environment and the picture really changes. You mentioned this some other data reports coming up. Besides the jobs report, obviously the Fed has a dual mandate. What are some of the other data points that we should watch to try to get some sense of the direction the Fed could be going in?
Well, there are a number of labor market reports that are going to come out. So, you know, the official jobs report is just one of them. And then, you know, these recognize that the officials are also listening to people in their districts and trying to get a sense of whether or not there's more inflationary pressure and the question of whether or not there will be pass-through. And so I think there's just, you know, qualitative, quantitative information. They're trying to get hold of a very complicated situation right now. And the only other thing I'd say is that last time the Fed spoke, which was so-called dot plots, remember that 9 people thought 2 cuts this year, but 9 thought 1 or even none. And I think the market is sort of ignoring that other side of the conversation, with 7 saying 0 and only 2 saying maybe 1.